By next Friday, about 80% of the S&P be done. That's going to reopen the buyback window. We should get an additional lift to the markets, but you could have a bit of bumpy road between now and the end of the month. October is the largest calendar year-end close for mutual funds of every month. So more mutual funds close out their fiscal year at the end of this month. Why is that important? Well, when they close out their year, they need to rebalance. They need to do their distributions, capital gains, dividends, and interest. That could lead to some selling. It is not uncommon. If you take a look at the seasonal month of October, the last week is kind of a rough month for the markets historically. Now, again, that doesn't mean major down days, anything like that, but having a bit of a correction wouldn't be surprising. That will set you up for the year-end rally. Buybacks come back. Earnings should be good for companies. We've lowered the bar enough. And then, of course, just a lot of retail momentum. I posted a chart out this morning. The number of levered ETFs have been just rising sharply over the last 3 years. Wall Street is really, really good at providing leverage product. And when there's a lot of demand for a specific type of product, you remember back in 2021, it was all about SPACs. And we couldn't get IPOs out fast enough, so we all created SPACs to sell to people. And retail investors piled into those, and it didn't work out well at the end of the day. But that's what you get when there's a rush to sell anything on Wall Street. They're just trying to get product out to the market. They don't care whether or not it performs or not, but they just want to collect the fees. Well, now retail investors are taking on more and more leverage across the board. Margin debt is ramping up at the fastest pace on record in the last 5 months. We're seeing investors kind of piling into leverage. And so ETF providers go, well, here's a 2X ETF. And everybody's like, yeah, I like that 2X ETF. Can I have more? So they go, okay, well, here's a 3X ETF. Can I have more, sir? Thank you. Please, I need more leverage. I'm not making enough money in this market. Well, Wall Street's very happy to oblige you. Have now come out with 5X ETFs, 5 times leverage on different positions. 5X leveraged ETFs are fine. There's nothing wrong with them when they're going up. But you have to remember that leverage is a double-edged sword, and the edge that cuts you cuts the most deeply. So when these things reverse at 5X leverage, you're not going to lose some of your money. You're going to lose all of your money because options are going to go to zero pretty quickly. But this is the market environment we're in. Very, very retail-oriented, speculative activity. And again, I get it. Right now, there just doesn't seem to be a risk. Every day, things just go up. Just every time we have these dips in the market, this retail buying coming in, and now they're doing it just on a lot of leverage. Again, momentum trades in markets can last a while, but understand that they do eventually end. Catch me daily on The Real Investment Show. The link is in the description.